let us delve into this week's outlook. And this week, I would really desire that we look at both Euro USD and USD CAD. All right, so for the past 2 weeks, we've had these spots marked out that this is a point that Euro USD is currently bullish overall. It is currently bullish. However, we know that the fact that the market is bullish does not mean that there won't be seasons of retracement. So as far as our opinion and understanding of market structure is concerned, Euro USD is currently retracing. And yeah, we've been able to maximize these sales down to this point, right? But this region right here is where we are expecting. For me, I feel the market has already tapped into the region already in a way if we choose to extend this a bit further. Yeah, because support and resistance are more of zones, not levels, not lines. Yeah, that's the best word I want to use. Like support and resistance are more of zones, not a specific price level or a specific horizontal line. So for the past couple of weeks now, we've been agreeing to the fact that Euro USD is number one, bullish. And currently, what Euro USD has been doing is just to do what? Simply to retrace. So, what do we expect for this week? First off, is that Euro USD, although bullish on a weekly scale, is currently bearish on the intraday level. So what we are talking about, or what that simply means, is that even though we are expecting a buy move to the upside from this region, right? The markets will not just start buying all of a sudden. No, the markets will not. Because when you scale to the lower time frame now in the 4 hour, for example, you can see that the market has clearly been doing what? The market has clearly been pouring down. So what do we do stepping into this week? The first thing to do actually is just to still continue to follow this bearish movement to the downside, which following structure in a very simple manner. If we look at the structure within the structure, this is a high, a low, lower high, lower low, lower high, lower low, lower high, lower low. And it seems market has come to create a new lower high, going to create the new lower low. However, there is a checklist we follow. There is a structure of approaching the markets we follow. So let's write it down again, which is structure or trend, your range. The next is liquidity, and then the final one is your banks or your entry. So this checklist used to be 5, but the one I'm not putting there is FIB. So what I initially did first off is just to give us an overview of the entire trend. So let's pick it up again from the weekly now. Euro USD on the weekly time frame is clearly bullish. As far as my opinion is concerned, what we've been doing all the while, not my opinion, no, that's a wrong statement. As far as our understanding of structure is concerned, the market is bullish. What we have been doing for the past 3 weeks is retracement. And we marked this since like 4 weeks ago or thereabouts, that this is where this region is where we are expecting that the market should retrace to. And then from here, we do what, expect movements back to the upside, of which got so good. The market has been doing, exactly just that. However, you know that even if we are expecting bullish movements to the upside, the markets will not get into the zone, although it has not gotten to the particular spot I am expecting yet. However, this place was an imbalance that was marked out. I'm so sure that if we bring out some of the tools we've hidden, nope, we would see that. So this is also an imbalance on a weekly time frame. Don't get confused. We are still on that trend, which is that confirming that first off, we are in a bullish environment and the market has retraced. So we are currently at a phase that most likely we should be expecting a further push to the upside. So first off is, let's do it this way to make it easier. So trend on a weekly level, we are bullish. Let's start that way, because these are part of the places where people sometimes get confused, mixing trends together. And I'll give simple statements that will solve solutions to some of those problems. Now, the weekly is bullish. Don't forget to mention this, that what we've been experiencing all the while is what? Retracement. At least wherever you learned trading from, whether the person even understands trading eventually or not, at least one of the things you will learn is that markets move in waves, expansions, and retracements. So currently the market has been retracing, except if this entire move is the move with which the market wants to eventually go and break this structure. But the fact is, until the market does so, we cannot say that that is what the market wants to do. That's one of the things that causes trouble for traders when analyzing the market. It has happened to me too before too, because you're in a situation whereby maybe you expected the market to retrace and buy, and then the market eventually went to break structure. And once it happens to you a couple of times, it's as though you don't know which place to choose. Men and brethren, until the market eventually decides to break structure, delete that possibility from your head rather. Just follow the market as it is doing what it is doing. I believe that is making sense to us. So don't just assume that, this one that the market is dropping, you won't go break structure, be that. Until the market does so, you cannot tell. So keep following the market as it is delivering. That's one of the phrases I use a lot. We follow the market as it delivers. So with that being established, EURUSD has been retracing. So since EURUSD has been retracing, what is important to note is that although the weekly is bullish, the daily is what? The daily is bearish. And then the 4-hour too is what? Bearish. So let's take note of that too. Daily, D1, bearish. H4, bearish. Why are these things important to note? They are important to note because although market has gotten into a region where we are expecting a bullish movement on EURUSD, fact is that weekly we will never start buying until the 4-hour and daily time frame change structure to the upside. Are we getting what this should not be confusing to anyone. That is to say that we are expecting the weekly to buy, right? But we are saying this weekly will never. It's the nature of the market. This one is not prediction. It's just the nature that this buy that we are expecting, it won't happen until both the daily and 4-hour change their character or break structure to the upside. So to make it very simple, since we are intraday traders, we are not institutional traders, we are not positional traders. They are the ones that will take trade and leave it for like 6 months, 3 months. We are dealing with Monday, Tuesday, Wednesday, Thursday, Friday, looking for opportunities to maximize the market. So as far as this week is concerned for us, men and brethren, EURUSD may be bullish in the overall picture on the weekly time frame. This week for us is still what? Bearish. That's how simple it is. Why? Because looking at it simply from the 4-hour time frame, it is clearly obvious that the market has been doing what? Pushing to the downside, giving us series of what? Lower highs and lower lows. So that is to say that inside this week that we are entering, what should we be looking for? We should be looking for more sales opportunities. It's that simple. Markets just broke a major low, taking out major liquidity. So we can see that we experienced the retracements already. Our market tapped into a beautiful spot, and it's giving us a retracement to the downside already. However, market closed within a range, so that's trading range, because there is a range every trader must be able to identify that, okay, since I want to buy, following what I understand about market structure, I only want to look for sales opportunities within this region. Anything that goes beyond this region, all things being equal, that must mean that the market has changed its character. That is what range is for. And if I want to buy, I want to buy within this region to this region. Anything beyond this region, that means the market has changed its character. I want to begin to look for another position, which this time around may not be buys anymore, but sells. So in this situation right now, ideally, this will be our top range. And then this will be our down range. So that is to say that as we are stepping into this new week and we want to follow this bearish move, this is the zone or range in which we want to look for sales opportunity. The moment the market retraces and even ends up going beyond these spots, there's every probability that eventually market has done what? Has changed that character to this weekly bullishness. And then at that spot, what we want to begin to look for are buying opportunities. Are we getting this mode of approach? I want to get responses, please. Are we getting it? I'm not hearing anything from anyone.
I'm getting it little by little, to be honest.
Little by little.
Still following suit, sharp.
All right.
Yeah, I'm following suit.
You see, I'm following suit.
Yeah.
Jegede Francis said he's getting. So that's it. So this is just I don't know how best I can put it, but the day I got to this junction where I could analyze the market the way I am doing it now, it transformed my game a lot. Because initially I used to be like, a weekly is bullish, daily is bearish, 4-hour is bullish. Unfortunately, we are not even seeing that scenario now. Which one do I even now follow? But that's how you follow the thought process, which is that weekly is bullish, but fact is weekly has been retracing. So for every retracement on the bullish time frame of the weekly, it's a full bearish structure on the daily and 4-hour. So that is what you want to follow for the meantime until 4-hour and daily eventually change to the upside. So long story short, entering this new week once again, we are bearish on Euro USD. That's our trend direction, bearish. Range, we just marked it out. Liquidity. This is the concept, one of the concepts I love so much. And this is one of the concepts where I often brag the most, which is that until the market takes liquidity, this one, you can quote me anywhere and you can take this statement to the bank. Until the market takes liquidity, the market never moves. So what are liquidity, or where are liquidity points? Liquidity points are points within the range that until price has gotten there, forget, price is not going to the direction you are anticipating yet. Example, market has been moving to the upside from here back, and when the market got to somewhere here, people would have been expecting moves back to the upside. Now, within that range, these are liquidity points. This low, for example. As you can see, the market did not do what? The market did not begin to move to the upside until that low was taken. The moment the market took that low, took this one, what happened? The market began to push back up. When we had this minor change of character on this particular time frame, at that level, rather, let me put it that way, what happened? Market had to come for some internal liquidities again, before what? Before it began to do what? To move back to the upside. So the concept of understanding liquidity is very important, but we can't, of course, I think there is a video on that on my YouTube already, because when you understand the concept of liquidity, I think it will introduce a lot of patience inside people's game, which is that just let the market do its thing. So as far as this entire trend is concerned, which liquidity am I expecting the market to take before we begin to move to the downside finally? So number one for me, Actually, when you go to the 2-hour time frame now, yes, it looked as though the market has taken this internal liquidity. This particular one right here, the eye of that candle. If we zoom in, Shina if or when we zoom in, you realize that the market has taken that high. Can you see it over here? Yeah, the market has taken that high. So are you getting the concept of what I'm trying to say? If you don't understand liquidity points, this place may not be so clear for you here. But liquidity points are previous highs, previous lows that are within a range that markets must always be drawn to. Are we together? So this is a liquidity that has been taken, and the moment the market took it, what did we see? The market began to move to the downside. However, with my understanding of markets and following the markets over the years, I'm of the opinion that the market has not actually fully taken liquidity rather. I'm not saying it hasn't. I mean, the market can just continue to move continually to the downside. But from what I've seen the markets do over time, I'm still expecting this liquidity point to be taken. This one, yep, to be taken. This or this. Of course, or what? Or this. This is not confusing. The fact is that the market has given us 3 internal liquidity. There are situations whereby the market just give one. Like in this instance now, I don't know, it may not be clear to someone else, but to me it is. This particular high right here was an internal liquidity. Market came, took it, and we began to move to the downside. I could spot it because I actually took a trade from there. Are we together? So these are 3 liquidity points that I'm expecting that once the markets open by what? By 10 a.m. And I said 10 a.m., 10 p.m. So sorry. It should, all things being equal, go for either this, or this, and then from there we do what? We continue to move to the downside. It's that simple. So we've identified our trend, we've identified our range, and now we have successfully marked out the liquidity points. So the next question will be what's entry or banks. So how do I maximize all of this, Mr. John? It's simple. Wait for the market to open. When the market opens and market gets to any of all these spots, then you go to your lower time frame and look for opportunities to enter. That's how simple it is. Yeah. On this particular day, I just want to give us an example so that we can get what I'm saying, and so we just don't get lost. On this particular day, yep, where that red line is, I was following the markets, and I think I incurred a loss initially, but after that, I was just like, no, I'm done for this week. The market has done enough already. Okay, so when you look at this from the 4-hour time frame, the market just broke this structure to the downside. This one right here. So we had the break of structure to the downside. I was expecting a retracement, and then from there we continue to follow the market to the downside. So from 4-hour, I scaled to a lower time frame, which is 1 hour. Yep. This chart looks modded already. I don't know. It looks too much for me. Let's take out all of this here. So this is where we are. So I saw this point. Oh, zoom is saying right now. I saw this point as internal liquidity. No, not that one. Is it that one? No. I think it was the high of this particular candle. Yep. So I saw it as internal liquidity, and I was looking to pick an entry from the 15 minutes time frame. Yeah, so the moment we had this, and then we had this break of structure to the downside, I think I had my entry somewhere around here. Of course, I was taking out. The market definitely wanted to come higher. But if you check very well, what do we have over here again? When you switch to the line charts, we have the sweep of liquidity, break of structure to the downside, and anyone could have entered here. So if I wanted to still enter on that day, this is where psychology comes in. I had incurred the particular loss I wanted to incur for that day. It was just one though. And if I had entered from here again, I mean, of course, the market stands because there's a particular point we're expecting the market to get to. The essence of this is just to reiterate one thing. The essence of liquidity sweep and how to spot your entry on a lower time frame. So that's that. I want to take us back to the drawings I cleared. Okay, so good. Once the market gets to any of all these liquidity points on the 4-hour, it's as simple as scaling down to, you can see I don't go less than 15 minutes. 15 minutes, 30 minutes, 1 hour. And then what do I look for? I go and look for a change of character back to the downside. And then I join the move. It's that simple. But if we'll talk about a bit of psychology, guys, the fact that we anticipated this move does not actually mean that it is all the time that will be part of the move. If the market does not give you what you know how to identify, don't force the trade. For everyone here who is a trader that must have lost money at some point, you can clearly tell that majority of the losses you've had in the markets are not losses that you were meant to incur. And that's where trading could be frustrating. So I just feel I need to chip this in. It has happened to me too. There are trades, there are weeks I've gone, we analyzed the market. I was waiting for the move, but maybe the market did not give me the kind of change of character I knew how to identify on the lower time frame, and I could not participate. But the fact that I could not participate does not mean that the market would not give me another opportunity. So come to think about it, trading only when you can see what you know how to identify, which increases the probability of your win rates, or just trying to pursue the move and end up injuring yourself due to losses that you are not meant to incur. Which one is better? I'm sure we know the one that is better already. So as we step into this week, guys, of course, I would take a screenshot of this and then send it to the WhatsApp group so that we just have it as a form of I don't know, tour guide. Yep. So this or this, these are liquidity points we're expecting the market to take, and then come down, and hopefully we continue to move back to the upside. This is our expectation for the week. So we've identified the trend, we marked out our range, we identified liquidity points that we think the market should take before it continues down, and then we spoke about how to pick our entry just in case whenever the market gets to any of these points. That's how simple it is to have our weekly outlook. So let's see how we can replicate the same thing again on USDCAD. So we start from the weekly. When you look at weekly time frame on USDCAD, majorly it has been bearish, but if we switch to the line chart, it seems as though we have a break of structure to the upside already. So it's that simple. Forget all these things. You see all these things that the market is doing. The moment the market did this one right here, whether it's a retracement to now continue to the downside, that's none of my business. What is my business is what the market is doing currently. So currently, what is USDCAD doing? USDCAD has broken structure to the upside on the weekly time frame. So what should I be waiting for? A retracement and then join the expansion move to the upside. If the market now chooses to do this again, continue down, what do? Then I join it. But until it does so, I should not put that in my mind. I've said that already. I'm saying so because I've seen people in this sport again and again, and that makes it difficult for them to know how to even know what direction the market is facing. So on a weekly time frame, on a daily time frame, or daily yardstick, it's super clear. USDCAD has done what? Has broken structure to the upside. So that's our trend. So what's our range? We'll be looking for buying opportunities within this massive candle that gave us the what? That gave us that break of structure. So what that means is that ideally, any retracement that goes beyond the low of this candle, a buy idea is no longer valid. Except maybe if market now wants to take the low and still go back up. But until it does that, we should not say that that is what it wants to do. So this is our trading range. It is within this circle that we'll be expecting buying opportunities, that the market should do what? Retrace to a region and then go back up. That's our trend. That's our range. So where are the spots we are expecting that the market should retrace to, and from there we can continue to move back up? If you look at this top right corner here, I just have them here for easy access, because sometimes the fact that I've learned to analyze the charts easily does not mean that I can't get module up. So I look for my order block. This is my order block right here, because on the weekly time frame there's apparently no imbalance. So that's my order block. If there's a breaker block, as it were, it should be this particular candle, but you can see that it's still overlapping with the order block, so there's no point marking it out for me. Just that one is good. So from there I scale to the daily time frame, and then I see how to clearly mark out my order block. So this right here, that's the order block. So what that means is that ideally what I want to do is, as we step into the week, I want to expect a retracement to get to this point first, at least. It may go deeper rather, but at least I want it to get to this point first, and then it is from here I can now begin to look for buying opportunities back to the upside. Now, since I've experienced the market again and again, what can the market do? Fact is that this is a liquidity point that also serves as a form of imbalance right here. This is an imbalance. So fact is that markets can open, tap into this imbalance, give us a break of structure on the lower time frame, and continue to the upside. But Coco is sure that the fact that the market is bullish does not mean that we'll just jump into the market. We need to see some form of retracement and then we join. So you can see we have two scenarios already. Market takes this liquidity and gives us opportunity, or comes this deep, and then from here we continue to move back to the upside. It's that simple. We've done the analysis. Analysis don't finish with that. It's that simple. So the only thing we are just waiting for is for market to open and begin to retrace. So while it is retracing, really, you don't want to do anything, except maybe you've learned how to join such movements. And even if you do, you know where you should be looking to take your TP. This is not the kind of trade you say you want to take 1:10 when you know that the market is bullish. No. So it's that simple. We wait for the market to retrace, and then, of course, as usual, we scale to the lower time frame, 2 hour, 1 hour, and then what do we look for? Another sweep of liquidity, break of structure to the upside, and then we continue. It's that simple. So as usual, we've come to the end of the outlook for the week. Euro USD, this is our expectation, a form of retracement to continue down and then back up, and then USD-CAD retracement to continue up. So our session will expire very soon. This will be uploaded very soon, so we all can just get to go through it. Again, it was nice having us around, and I wish us all a very, very productive and profitable week ahead. Cheers and God bless, guys.